Today, I'm going to dive into the topic of real estate investment strategies. If you're a real estate investor, does it help you to have a strategy? Well, by the end of this video, I'm going to help you understand how important strategy is when it comes to you as a real estate investor, and I'm going to share with you a real estate strategy I'm doing right now in today's economy that might be the best strategy I've ever seen in real estate. Whether you're in business or whether you're in real estate investing, you need a strategy. If you've ever wondered how some of the best investors grow their real estate portfolio to outrageous numbers, it's probably because they follow a certain strategy. Let's dive into this topic of real estate investment strategies by first understanding some of the basic components of real estate investing. Next, I'm going to share with you why strategy is important when it comes to real estate investing. And finally, I'm going to share with you the most powerful real estate investing strategy that I've ever seen. It's something that I've come up with over the last 12 months called cash flow flipping. If you're ready, let's dive in and go. Let's talk real estate from the basis of real estate investment strategy. So first off, what makes real estate a great strategy when it comes to investing? At its very core, real estate is an appreciating asset. That means that you are buying a tangible asset that typically, and history is on its side, where it goes up in value every single year or over a period of time. There's definitely been years where prices have pulled back, but if you look at over time, whether it's 10, 15, 20, 30, 50 years, real estate has always appreciated. Think of it this way. Let's say that you know somebody who bought a home in Southern California, maybe back in the mid-90s. And you might say, man, they picked it up for a crazy price. Maybe they paid, I don't know, $300,000, $400,000 for a small home. Today, that same home is probably worth over $1 million. And if they've lived in that home the whole period of time for 30 years and they didn't refinance their home, that home is paid off. They have an asset that is worth 7 figures. That is why real estate is such an important strategy. If you had 10 of those, 100 of those, imagine how pretty you'd be sitting right now. The other thing that makes real estate a great investment strategy is it pays for itself as an investor, right? The whole goal is buying a piece of property and having somebody else rent it out from you from a long-term perspective or a short-term perspective and be able to pay your mortgage and all your bills. Think about that for a second. What does it mean? You own a piece of property. Let's just say you own a single-family home and you rent it out over a longer period of time every single month, so it's a year-long lease. That person is paying your mortgage payment and the bills, while at the same time, what they're paying every month as far as the mortgage is paying down the asset that you owe money on to the bank. And typically, if you're in a long-term rental, a single-family home, that's rented out 93 to 94% of the time over the long haul. And so if you have somebody in that over a long period of time, eventually that asset is going up in value. The loan that you owe is going down, the money that's owed on that. And so you're creating a wealth scenario where the money that is owed is going down and the appreciating assets going up. You're creating wealth for yourself, right? That's why it's amazing. That's why real estate is such a great strategy when it comes to investing. So why are strategies important when you're looking at real estate? Well, obviously it depends on your individual situation. You can go into real estate and say, listen, I need a strategy where I need cash every single month, right? I'm trying to build up passive residual income. If that's the case, you're looking at a different type of real estate strategy than somebody that goes in and says, listen, I need a lump sum of cash. I need cash to live on every single month, every single year. So I need to find a strategy that I can go in, I can purchase maybe an asset or a piece of property, and I can turn around and sell that in a short period of time and make money every single month. Both strategies are great, but it depends on your personal situation as an individual. What are you looking to accomplish? I think that's probably the first thing you need to answer when you're looking at implementing a real estate investment strategy is what is your personal situation, tell you about what you need, and then you can go the different direction when it comes to real estate investing. Another reason strategy is important, not just in real estate, but in anything, it helps you navigate market fluctuations, market conditions. It helps you maximize return on investments. It helps you make informed decisions based off market trends. It helps you spot potential growth opportunities and ultimately help you achieve long-term success by aligning actions with specific goals, while at the same time minimizing risk in the real estate investing landscape. For example, there's a strategy out there called wholesaling, right? That is where people find property, they negotiate really low, get it at a very low price, and they turn around and assign that contract to somebody else at a higher price than what they got it for. And it's a very quick turnaround, right? I mean, the negotiation might take a period of time. It might even take a month where you're a solution for somebody, right? You got to go in there with the mindset, listen, how can I help this person? They're in a tough situation. How can I create a win-win situation? And eventually, if you get the property, say at this price, you can turn around and assign that to a real estate investor. That's called wholesaling. So if you got it under contract for $200,000 and you're able to turn around and sell it to somebody or sign the contract for $225,000, you make the difference in that at $25,000 comes to you into your pocket. That's a real estate investment strategy called wholesaling. And I know a company out there that has streamlined their strategy and they have it just perfect to where they are expanding and growing with a franchise model, and they're doing amazing things in this market. But they're utilizing an investment strategy that anybody can do. They're just doing it better than most people out there because they follow a strategy where they know they've got a system in place on how they find those properties, how they negotiate those properties, and how they find buyers to buy that property. It's something that's taken a period of time, but they've utilized a strategy that helps set them apart in a market that's almost a commodity because anybody can do it, but they're doing it better than anybody else because they have a solid strategy. One of the reasons I love real estate is because there's always innovative strategies that are popping up all the time. And there's a strategy that I think that I've come up with. I haven't seen anybody else do it out there, so I might be claiming it as a strategy that I developed. It's called cash flow flipping, but it's amazing. It came from something where I was looking at doing slow flips, right? But slow flips offered maybe good wealth down the road and even cash flow down the road, but it didn't offer cash flow right now. So this is the strategy called cash flow flipping that I've come up with. Essentially what I'm doing is I'm looking in the Midwest for properties that are between $50,000 to $100,000. And I've got to negotiate like a champ to get these properties 25 to 35% below what people are asking on them, right? So if it's a $70,000 property, I've got to get that for say $50,000. And like I said, because I'm making offers 25 to 35% below market value or what people are asking, I might only get one offer accepted out of maybe 10 or 15. But when I have that property, I'm utilizing private money from a private money lender, and that's anywhere between 8 to 12%, and I'm paying interest only on that loan. So let's walk through this scenario real quick. Let's say I find a property that's listed at $70,000. I get it under contract for $50,000. I use private money, I close on that property, and I want to close quickly, and I'm utilizing cash, which gives me some of the negotiating power to get it down from 70 down to 50. But once I have that property, I am then looking to sell that property in a lease option scenario, where somebody's going to buy that property from me at a certain price at a certain date down the road in a lease option. And so let's say that I lease option it to them for say $72,000. Now they might have seen that property for sale at $70,000, so them buying it from me for 2 years down the road at $72,000 isn't a stretch at all. And they might be pretty excited, but they give me some option money to be able to secure that property at that price at 2 years down the road. And let's just say that's $1,500. So they give me $1,500. They start leasing the home for me that they plan to buy 2 years down the road. And the monthly payment, let's say it's $1,000 a month. And so I'm going to count $100 of that towards the down payment. So if they stay in this home for 2 years and they're paying me $1,000 a month, I'm going to count $100 every single month towards the down payment. At the end of 2 years, they have $2,400 baked in, plus the $1,500 in option money, so almost $4,000 to utilize towards the down payment. So it's an absolute win to the buyer that's buying it from me because they got a built-in down payment or closing cost to be able to close on this home. But also, I've borrowed $50,000, I'm paying interest only. Let's say it's 12%. 12% on $50,000 is $6,000 annually or $500 a month. Remember, I'm getting $1,000 a month. I'm netting $900 a month. So I'm taking that $900, I'm paying $500 to the private money lender, and I'm pocketing $400 a month. And at the end of 2 years, when this individual buys it from me and executes on their lease option, I'm receiving $72,000. I'm taking $50 of that $72,000, paying it to the private money lender, right? And I'm pocketing $22,000 minus some closing costs and things like that, but call it $20,000. And I've made $400 a month for 2 years. That ends up being $9,600. So in that scenario, I've made almost $30,000 on one property. What if I did this with 10 or 100 properties? Start doing the math on that. All of a sudden in 1 year, it's $300,000 or $3 million if it's 100 properties. This is a strategy that is an absolute game changer. And if you want to understand exactly how to do this step by step, just click on this video below where I go into great detail about how to do this. Thanks for stopping by. Have an amazing day.